It looks like we're having a little bit of a relief rally as geopolitical risks are subsiding. But as we look ahead to the rest of this week and the months ahead, and attention turns back to the fundamentals, are we going to continue to see that rally in global equities?
Yeah, right, I think so, because the fundamentals have been strong. I mean, we're about 90% through the earnings season, both in Europe and in the US. And by large, we've seen companies meet or beat expectations. And perhaps this isn't a surprise given how strong PMIs are, the coordinated global growth that we've seen. One surprise has been some of the companies have been exceeding expectations, have actually seen quite sharp sell-offs. So perhaps there is even an opportunity there, perhaps because of some of these geopolitical uncertainties which have been bubbling up underneath, sort of taking the shine off those fundamentals.
Right. And you see that as an opportunity, not as a sign of nervousness in the markets?
There is a little bit of angst. There's still questions about inflation as well, and we've seen that particularly in sectors such as general industrial. So some of the big European industrial stocks, SKF, Sandvik, they had great numbers, but sold off because they weren't able to, they were sort of citing an inability to pass through some of the pricing pressures that they've seen themselves coming through from commodity prices. But so there are definitely opportunities there.
And Helen, how much have the currency differentials also impacted this quarter? So we've seen it, between 8 and 9% weakening of the US dollar, depending on what gauge you're looking at, and then, a strengthening of the euro.
Of course, yeah, you're quite right, Bonnie. We have seen that impacting, and in fact, the euro has been strengthening from sort of springtime, beginning of the year. We've seen it a little bit in numbers, but I think in terms of European earnings going forward, we have to keep a watch on that because it could well hold things back a little bit more. But what we've seen as we've gone through the earnings season is we haven't seen analysts pulling back their consensus forecasts for 2017. So in terms of full-year numbers, full-year expectations for both European equities and US equities, we're still expecting double-digit growth this year. So that euro strength isn't yet beginning to bite, despite the fact it has weighed a little bit more on the stocks than it has on the S&P.